Welcome to the first VRT session, Road to World. Setting up your crypto MSB, to-dos and the not to-dos, as well as the compliance challenges. My name is Ana Gonzalez, and I am thrilled to welcome all of you to our first VRT session, the Setting Up Your Crypto MSB. I'm pleased and excited to be your host. And on behalf of everyone in the CrossTech Payments team, I welcome you and hope you enjoyed today's agenda. This is the first VRT session, Road to World, and we are preparing for our flagship event, our conference, CrossTech World, in November. In this session, Mitchell Souza, CCI Director of Sales of Capital Compliance Experts, will be moderating the session. Mitchell, I have the great pleasure to introduce him for the first time as part of our VRTs. Mitchell Souza has dedicated his career to seeking opportunities within the financial services industry. He has been an integral part of the company's growth since its infancy and now focuses on product management. As a certified cryptocurrency investigator, Mitchell has been instrumental in identifying compliance services for the crypto industry. During our session, we're going to discuss how more and more traditional money transmitters and industry innovators are interested in or have already begun offering crypto-related products and services. The addition of crypto brings with it many unique opportunities, as well as unique tasks. This can be exciting and at times overwhelming. During all this session, Mitchell is going to guide us and our panelist on the discussion that will take for you the proper address the unique and challenging realities of adding crypto to your business. Now, with no more further ado, I give the floor to our moderator, Mitchell Souza, who is going to present also our speakers.
Excellent. Thank you, Anna. And thank you, CrossTech, for this opportunity to discuss some very interesting topics today. I'm very pleased to introduce our two panelists today, Joe Ciccolo and Jennifer Crowder. Little background. So Joe Ciccolo, he's the founder and president of BitAML, a compliance advisory firm exclusively serving the Bitcoin and cryptocurrency market. Founded in 2015, BitAML has served hundreds of innovative clients, including Bitcoin kiosk operators, cryptocurrency exchanges, traders, and trading platforms, crypto hedge funds, and lenders. Jennifer Crowder, her practice is focused on fintech, electronic and emerging payments, financial services, and regulatory compliance. Jennifer is an advisor for clients on structuring financial services, technology solutions, and payment products to comply with applicable state and federal regulations. So I want to encourage all attendees to participate. I encourage everyone to ask questions. I believe there will be the option in the Zoom chat. There's a little QA section. We'll be answering them kind of throughout. Also, kind of to kick this off, I believe we can put a question up here just so we can kind of get to know the audience a little better. And why don't we kind of go really just dive into some of the topics today. Let's see. So I guess I'll start from the basics and I'll pose this question to you, Joe. For any new cryptocurrency venture, where would someone start in regards to compliance?
Sure, great question, and great to be with all of you, and thanks for CrossTech for making this happen today. Where should folks begin when going down the sort of crypto rabbit hole of offering crypto-related products and services? We generally start at a high level when folks approach us, and for some context, by far our most requested service is to help draft the initial AML compliance documentation. So we quite often meet folks very early on in the setup and organization of their enterprise or the products and services if they're venturing into crypto from the traditional space. So great question indeed. The core three requirements that we focus on and from which many other subsequent requirements fall under our registration with FinCEN. And so if you're already in traditional MSB or traditional money transmitter, you're probably already aware of that process, but just the same, it's important to make sure that that is of course up to date. So registration with FinCEN. The second item is to make sure that you are properly licensed or permissioned at the state level. So every state except for Montana has a money transmitter licensing regime. The crypto adds a little bit of a wrinkle to that because some states, depending upon your business model or other facts and circumstances, may not necessarily require you to have a money transmitter license. And of course, if you already have a money transmitter license on the traditional side, there's going to be some contact you're going to have with the regulator because, in my opinion, and I suppose the opinion of the rest of this panel, that is definitely a material event and one that requires reaching out to your regulator and making sure that that is properly disclosed. And then the third of these big three is a written AML compliance program. And of course, in that we have the independent review and some of the other requirements, again, sort of cascading below that. With the AML program, obviously you want to have policies, procedures, and controls designed to thwart, prevent, detect money AML, or prevent and detect money laundering or other illicit activities. That certainly goes without saying, but when we're talking about crypto, now we're talking about a raft of different tools and different assets that you want to bring to play. Certainly you want to have learned individuals that are up to speed and have at least a foundational knowledge of crypto and the risks that they pose. And of course, some of the tools which we can get into a little bit later on, like blockchain analytics and some of the other methods and platforms out there are going to be a little bit different than you're used to. So that's something you're definitely going to want to dive into, of course, above and beyond, KYC and some of the more other, readily understandable technologies that folks would maybe already be aware of from their institution.
Excellent, excellent. I guess I'll kind of pose the same question to you, Jennifer, kind of coming more from a legal perspective.
Yes, sure. So Joe mentioned the state licensing. I think the FinCEN registration is fairly straightforward, but then when you look at the individual state laws, they differ. And so we help clients assess their product and service that they want to provide and figure out where it falls within the regulatory construct of each state. And, like Joe mentioned, some states require the licensing for crypto. And so we would help the clients identify which states they would need to obtain licenses and then, help with that process, which in and of itself is different in each state. And, Joe mentioned also, reaching out to the states. And so that involves, if you're already licensed, reaching out to the states and updating your business plan, for example, to include the additional crypto services that you plan to provide. Some states will require an additional bond amount if you're providing crypto services. And, there's a few other things that the states focus in on for just that crypto piece that you have to alter and kind of improve or expand upon if you're already licensed.
Excellent, excellent. And I guess I'll pose this question sort of piggybacking a little bit off that. So in regards to cryptocurrency compliance and just traditional MSB compliance, I guess I'll go back to you, Joe. What would you say are some of the main glaring differences?
Sure, I think there are many similarities, but if we get to the differences specifically, I think looking at transactional monitoring, certainly blockchain analytics, for those that aren't aware, it's sometimes called blockchain forensics. So there's several vendors out there that sell such services. And essentially what it is a software that analyzes the blockchain, which we all know as an open source record of transactions in crypto. So yes, crypto is not anonymous. There is a trail of breadcrumbs digitally. And these blockchain forensics tools are quite powerful, and they can analyze the various different wallet addresses, both ones used by your customers as well as the recipient on the other end of that transaction, and provide some sort of risk context, if you will, some sort of scoring. Different software platforms use a number scale, others use severity benchmarks, and you can sort of categorically put in things like darknet activities or high risk exchanges or whatever activity that's tied to, and it gives you a risk calculation that you can then use with information you already have on file about that customer, whether that's their transaction history, source of funds, or other attributes they provided both at the time of onboarding and throughout the relationship. And that really gives you some rich information and context to go on and really help you decision an alert routine, for example, or referral from one of your frontline staffers. And that's very, very powerful information. And I think, going back several years, and you're kind enough to reference how old I am, being in the space now for 7 years, Going back to the early days of crypto, this was something of maybe a pseudoscience, or it was sort of just an idea, and there were some ways to kind of trace it. It wasn't really a commercially viable solution. But fast forward to today, these blockchain analytics companies are amazing with the depth of information and scoring, and it's used by law enforcement and regulators, and really powerful tool. And it's becoming much more of an expectation as opposed to a nice to have. In fact, we're seeing a lot of financial institutions that onboard crypto related companies or those providing crypto products and services that are insisting that those companies have a relationship and engagement with some of these blockchain forensic companies. So that to me probably sticks out the most. We were talking offline as a group about making sure we have good subject matter experts in-house with regard to crypto. And we recognize that they're few and far between, present company excluded, in terms of knowledge about crypto compliance, but really just putting yourself out there, gathering information. Congratulations, you're on today's webinar, but other resources and assets that are out there, attending conferences and just gathering information. You don't need to be there from day one of crypto. You don't have to have years and years of experience, but surround yourself with that information. Reach out to these various different companies in the space and others, and really surround yourself with as much knowledge as you can, and help to invest in that knowledge along the way, because we're not going to flip a light switch and all of a sudden offer a crypto product or service. We want to be going down that path, gathering information, building a team around that, and sharing those experiences with our other colleagues, both in-house and some of the other folks in the marketplace at different events, whether that's at CrossTech or other webinars you might attend.
Excellent. Well, yeah, no, I'm glad you mentioned, I mean, just being in the crypto space, it's, no one knows it all, right? There's always, every conversation I've ever had with someone, you always learn something. And it's just really just an ever evolving and, really just rapidly evolving industry. So Jennifer, yeah, I would pose the same question to you. What do you see as some of the main similarities and differences between standard compliance for MSBs versus specifically crypto related businesses?
I would say the hottest item that we see, the biggest area where there's kind of a need is, like Joe mentioned, the subject matter expert. And we see that just on the plain vanilla money transmission side. But then when you layer crypto on top of that, there's even more of a subject matter expert niche that people are trying to fill. So it's definitely something that there's a shortage of right now, as far as having in-house, but you can, always kind of plug some holes with outsourcing solutions.
Right.
And Mitchell, if I may, I want to go back to maybe one other difference. I don't know if it's necessarily a difference, but maybe it's sort of a level of enhancement in terms of a point of emphasis from the regulatory perspective. We're hearing more and more chatter in regulatory circles about consumer protection with regard to crypto. And more generally, this isn't just an exclusive crypto conversation. It's very important to have good consumer protection safeguards. Something as basic as the clear disclosure of your fees, what particular methodology you're using to arrive at a spot price, what recourse for consumer complaints are available. And so being here in California, it's a big point of emphasis with the Department of Financial Protection Innovation, which currently has an open comment period, which I believe extends into early August, with regard to how to regulate crypto. And certainly one of their hot topics that has emerged is consumer protection. So where that comes in a little bit more to play with crypto is it's a new technology. So there are a lot of new people getting involved. Some folks are just overly eager and overly enthusiastic to come into the crypto space. I'm excited for them, and we're excited to have them, but they have to understand what the risks are, understanding things as simple as, hey, the price of Bitcoin or the price of cryptocurrencies, it ebbs and flows. It's very volatile, right? You have to understand that risk and not to put your life savings into crypto. Something as basic as that, all the way up to advising on some of the different scams and some of the different illicit actors out there trying to get you involved in maybe some of these more obscure cryptocurrencies or things that may have a fraudulent nature to them. So that's something that folks should definitely be aware of. Again, it doesn't change. Should have good fraud detection, good consumer protection, across the board, regardless of whether you're in crypto or not. But the stakes become all the more higher when you're dealing in a nascent space, a nascent industry where there's a lot of enthusiasm, a lot of excitement. That's great, again, but we want to make sure that consumers have the information they need and they have recourse to come back to you and your team to say, hey, something's wrong here, or gee, I want to talk to you about this particular product or service or transaction. I think there's a miscommunication. And having those channels readily available to engage the consumers. One thing we noticed in our conversations with DFPI here in California and others is that many of these consumer complaints could have been resolved with a simple phone call, a simple email, a simple direct conversation. Oh, that's the answer I was looking for, or there it is right there on my screen. And something that could have been dismissed with an easy conversation over coffee that took 5 or 10 minutes for someone at the company to have with the consumer. And I think it's real important to take those opportunities, address those, nip it in the bud, as it were, address those concerns early on so they don't elevate to something more serious. And certainly as a business owner, you don't necessarily want those to elevate up to the level of a regulatory agency, now having that as a ticket in the window to follow up with you.
Right. Yeah. Those are great points. Anything to add, Jennifer?
No.
Awesome. So let's see here. It looks like we got a question. It actually kind of leads into another question I was going to pose to you guys, because there's obviously a lot of, Bitcoin being international, really cryptocurrency in general being an international, technology. What would you say are some of the main barriers entering, let's specifically talk about the US market. What are some of the main barriers for a company? And I'll pose this to you, Jennifer. What are some of the main barriers entering the US market for companies?
Sure, I'd say the main barrier is the licensing aspect that we've already touched on. Companies that are operating in other countries that perhaps have just one license or some passporting aspect between countries, they come to the US and learn that they've got to, obtain maybe 25 up to, 49 different licenses, depending on what the aspects of their services are. It's definitely a deterrent because you've got, capital requirements. Every time you're applying for a license, you're signing up to be audited and overseen by that state. So there's ongoing compliance obligations. So it can be overwhelming. And, not only is having to get the licenses in the individual states a barrier to entry, there's capital requirements, which, for some startup companies, they may not have that capital or aren't backed by or supported by a parent company that can establish the capital or fund the capital needs. So they may not even be able to apply for licenses in the first place.
Yeah, that's very interesting. You mentioned a couple things. I've dealt with several different companies that, they have that sort of Silicon Valley excitement. They developed this incredible product, entering the market, totally, completely not really, not thinking about the compliance part of it. And then they go to actually, start operation and they go, oh, this is probably going to be 6 months down the road before we can actually operate. So it's like, it's really, my best advice is always, do everything in tandem, do compliance from day one while you're developing your product. Because I've seen so many people have to just, delay their whole operation. And especially with the crypto space, how fast it's moving, it's, time is everything. So yeah, do you have any feedback on that, Joe?
No, great points. I think maybe just to add a little bit cherry on the top there to what you said, Mitchell, getting involved holistically with the teams as we do at BitAML. When they come in our door, yes, we're talking to the compliance officer and compliance personnel and senior management. That makes perfect sense. But we're also talking to the tech team, right? Because these requirements are going to be built into your software application, your Bitcoin ATM machine, if you're going down that path. You're going to be asking customers questions, retaining information. So bringing those folks on early on and getting them involved is a great way to kind of bring the team all on the same page and to get away from that ill-advised approach of bolting on compliance. As you mentioned, Mitchell, and spot on, compliance should be there day one. It should grow with your enterprise. And so we do our best to kind of bring as many folks to the table. We don't want too many cooks in the kitchen, but we want to make sure we have all the right voices there because, again, this is going to be programmed into your software or even onto your website as a basic information landing page. We want to make sure that everybody's singing from the same sheet of music.
Definitely. I'll actually address one question we just received. And I'll pose this, I guess I'll just kind of open it up. Is New York issuing licenses at this point? And I think we all know the answer, but I'll leave it up to you guys. Go for it, Joe.
Yeah, a slow trickle is the characterization we've heard. So I believe that New York is still processing bit licenses, the NYDFS. I've not heard otherwise, but unfortunately, it's a very slow process. There are a lot of folks in line. That's one aspect of it, but there are a lot of requirements, and there's a lot of line by line review. We're less involved in that. I think maybe Jennifer might have some color on that. But we have several clients that have gone through that process, and many more that are waiting in line. So to my knowledge, it's not been disconnected or shut off for that matter, but rather it's a slow progressing process. And I think that someone had calculated fairly recently that at this rate, it's about 4 or 5 a year in terms of licenses that are issued. So that gives a lot of explanation as to maybe why it seems like traffic is not moving. It's just the traffic is moving very slowly.
Yes, definitely a slow trickle. And Mitchell, you mentioned 6 months for licensing, and I wish I could tell clients that was the case. We usually use that as kind of the low end, and then kind of 18 months as the outlier on the other end, and then you've got New York. So
Got it. Yeah. I'll ask this to you guys as well. What are some of the most common business types that you guys are seeing in your work? And I guess I'll ask you directly, Jennifer. What are some of the main business types that you're seeing in are your clientele?
I would say kind of, we refer to the Ubers and Lyfts of the world as the gig economy, but I think that is, expanding into anything that is done on a kind of a freelance or independent contractor basis. And I'd say there's been a definite uptick in companies wanting to support the payments and then support it with a crypto aspect, either letting the influencer or the creator who's providing the services either choose to receive crypto as a payment for their services, or allowing the brand or the company that's wanting to market their services to have the option to pay in crypto.
Interesting. Yeah. Anything else to add, Joe, from your perspective?
Yeah, it's interesting. Some of the business models we're seeing historically for us, there's been a lot of Bitcoin ATM or kiosk operators. That those numbers have gone down precipitously in terms of the number of new companies entering the space. There's a lot of competition at the top end of the market, where you have, I think, the top 10 kiosk operators have basically 80% of the market, and they are continuing to grow exponentially. So couple that with the price dip in crypto, that didn't help either. So it seems to be a drop off in that area. We're seeing more of an increase in over the counter, and I think that's kind of a stretched definition in the crypto space, but sort of the white glove service of exchanging crypto through remote means, whether that's an app or a website that can facilitate individuals wishing to engage in the exchange of crypto using various fiat on-ramp methods. A little bit more exploration in the area of prepaid and maybe some of the more elaborate business models involving lending and DeFi, but those are few and far between on our end. But we have noticed industry-wide that seems to be a growing phenomenon, at least until recently. A lot of DeFi applications and innovations coming to market.
Yeah, definitely. You mentioned something I'm definitely seeing as well with just consolidation with a lot of the, it seemed like, Bitcoin ATMs and kiosks. It was a big boom about 2 years ago, everywhere you went. And now a lot of them are either merging or just kind of struggling in certain territories, or, depending on where they are, struggling with, regulatory stuff. But yeah, it's very interesting. This market being sort of a 24-hour open market, right? Different than the stock market. I feel like its maturity has really been very quick in some ways. And then I feel like when it comes to how it's being regulated and just a lot of those aspects, there's some catch up. I feel like that needs to happen. So it's very interesting. I'll actually ask here, it looks like we got another question. A money transmitter company that offers crypto units to a customer to conduct its business. At what point does the liability exposure to the money transmitter company cease? When the company enters, and then it says, yeah, when the company enters the customer fiat wallet. And I want to say it could have something to do with the travel rule. I don't know if any of you guys want to answer that.
From my perspective, it gets very specific, and we look at a very detailed flow of funds and who owns the accounts to really be able to pinpoint the end of the transaction. But so the designated recipient, so if that's the person's wallet, it's when they receive it. But then I think you'd also have to consider who holds the wallet, who has the keys for the wallet. Is it something that company has hosted, or it's completely maintained by that customer, something that they've set up separately and can control?
Yeah, this may be a good, nothing to add there, but this may be a good time to mention just sort of relevant news and timely news that FinCEN is exploring, putting together some sort of open, I don't say an open dialogue, a response mechanism for so-called no action letters. So that's something that they are actively exploring and seeking comment on. I know there's several industry groups that are actively preparing some remarks and some thoughts on that, but I think it sort of opens up to some previous comments we made about engaging regulators or engaging folks like Jennifer with a legal background that can really dive into that business model and do some deeper research and interpretations and figure out where that nexus is, where does it become money transmission, and perhaps even if you get there early on, get some good advice and practical tips for maybe moving in a certain direction. So 1 degree left or right could be the difference between being in one regulatory box or another.
Got it. Yeah. Yeah, that brings up, there's so many thoughts that come up. And I was actually going to ask you guys, because I want to take the sort of other perspective of, the possible attendees of, I understand I need all this compliance. I need to comply and get my licenses and all of that. In regards to, specifically KYC and all of these things, if someone were to ask you, why do I actually need this? What would you tell them?
I can go first. So, I mean, just for purposes of, identifying who your customer is, and you're standing in the shoes of the entity that has the relationship with what is considered your customer, and there are obligations to identify who that customer is and make sure that, in addition, there's, OFAC check obligations to make sure you know who you're dealing with. And then layer on top of that, your AML program, as far as keeping within the construct of your policies and procedures that you have in place to prevent money laundering.
Yeah, I would echo those sentiments. I mean, there's that duty and responsibility that goes along with, being registered with FinCEN. Sure, it's easy to register with FinCEN and click the buttons, but when you click submit, you're agreeing to a lot of things, not the least of which is to be compliant, maintain, orderly control and report suspicious and unusual activity, keep good records, and so on and so forth. Above and beyond that, we add in with our conversation with our clients. Generally, there's little objection because they're reaching out to compliance professionals, so they're already of that mindset. They've already maybe acknowledged that there's some requirements and have done some research. Above and beyond that, we add to the conversation. Look, know your customer, KYC. What does that mean? That's knowing your customer and their financial dealings. Yes, that's the definition of the compliance side, but that's also just good business, knowing who your customers are and seeing what the average transaction is and what markets are we doing well in. So yes, of course, compliance first, but understand that this is going to be helpful, especially if you're a small business, you're starting off and you're really doing some research. Knowing your customer is a vital tool, not just for compliance. So we don't hesitate to sprinkle that in. And then, of course, we sort of add the sort of old adage, well, who do you want to do business with, right? So if you have strong compliance, you have a good benchmark out there for what you expect from your customers from a compliance perspective. You get that information, you retain that, you're setting the tone, right? So if you don't have good compliance gatekeeping, guess what? Everybody's going to come in the gate. Well, that's nice if you're a good person, but that's going to bring along with it a raft of illicit actors. And now, who is your customer base? Do you really want to do business with these folks? Is sort of our blunt front porch conversation to our clients. And then they immediately get it. They're like, oh yeah, I don't want them to take over. We don't want the inmates to run the asylum, right? We want to have orderly control and be in a position not just fulfill our duties, but really work with people that we want to serve. We want to serve good folks that want to use remittance through crypto or want to have some exposure to the crypto marketplace and participate in this new and exciting technology. Those are the folks we want to work with, and we want to make sure that we have a safe marketplace for that here. And we hope that our competitors and the others in industry do as well.
Yeah, you brought up a couple thoughts for me. A big history for myself, and still working with a large amount of check cashers. And when compliance started to become, implemented there, it was most of the check cashers didn't have to identify their customer at all. They were just cashing checks. They kind of have this system down internally. And So, just the KYC perspective, I think is a big part of it. And it makes me always want to remind people that, the blockchain itself, crypto transactions, it is completely transparent. It really just revolves around the origin, right? And that's, I think, the big key point that every regulatory entity, everyone is really after, is if you can find the origin, even for, criminal activity, all that stuff. If we can look at the blockchain, and find out the actual origin of where it started. In every other respect, the blockchain is really just a completely public open ledger that anyone can access. So I think that's a big point, and I think that's a big misconception too, just about crypto in general. Is it's, I think, especially in its first 5-6 years, it got such a bad reputation, right, from so many aspects, just because there was a large portion of it that was linked to criminal activity or illicit activity or money laundering, right? So yeah, I think now it's, as we're seeing regulatory entities, I think globally, are opening up to it. It's already a legal tender in certain countries. And I think, my perspective, I'd almost go as far as to say it's almost inevitable that it will, it can't go away unless we shut down the entire internet. There's really no way of making that go away, but that's a whole different discussion. So we got another question, actually. I think it's a great question. Question says, what do we need to know about the travel rule?
Yeah, the travel rule remains a very hot topic in the crypto space, and so the travel rule has been around. Obviously, it predates. It's pre-Satoshi, right? So before Bitcoin, the rules were already in place. What it essentially means, if there's more than one party to a transaction, or more than one financial institution, excuse me, that's party to a transaction, and the funds are more than $3,000 for the U.S. It's 1,000 recommended FATF, but 3,000 U.S. Certain information must travel with the funds from the sending institution to the receiving institution. So that has already been pre-wired, if you will, into our bank wire system here in the US, as well as Nacha, which handles ACH movements. It's been wired into the system. It's already there. Well, with crypto, Bitcoin and cryptocurrencies were never designed for the travel rule. Yes, you have the blockchain record, which Mitchell talked about earlier, right? We have some wallet addresses, time and date stamp. We have a trail of breadcrumbs to follow, and that's great, but was never made to attach name and other attributes. I guess, thankfully, that's more of a feature than a bug. But that presents a problem. Now, how do we, as financial institutions, send that information from our institution to the receiving institution on the other end, should the customer come with a custodial wallet? How are we going to be able to communicate that? And well, we can't really send an email every time there's a transaction and email the compliance officer, oh, hey, update your records on Bob. Here's the information to put in your file. That doesn't scale. And there's a host of security concerns as well, sharing that information through these sort of rudimentary means. So as time has gone on, there have been several vendors that have proposed different solutions, and without making any endorsements, I know that many of the blockchain analytics companies have developed different solutions, and other third-party vendors. So unlike ACH and Wire, where it's sort of ingrained into the rail, with crypto, it's sort of balkanized solutions in that you have various different vendors that have different solutions to help your institution send that information to the recipient institution. So it's an evolving science. The regulators, in my opinion, have been very accommodating and very understanding that the technology wasn't there from day one, and have really encouraged, and this transcends several presidential administrations and several leaders of FinCEN, have been very consistent in their messaging that they are very encouraged by what the crypto and the private sector space has put together. And we're still on our journey, but there are more and more companies out there that are able to help fulfill that obligation for the institutions.
Excellent answer. Yeah. Yeah, that brings up, I do want to get to this question here. It actually leads into the hot topic of banking, which obviously concerns everyone. So we got a question here. It says the biggest barrier to entry for money transmitters is getting access to bank accounts, as we all know. Are you finding this to be the case in the crypto space? If so, I guess I'll reword it. Are there banks that are banking crypto-related businesses?
Yeah, I think all three of them. There's a very small, very small cohort of banks that support crypto. By our estimation, we believe that there are more banks willing to support licensed cannabis than there are willing to support crypto, which is funny because one of them is illegal under federal law and the other is not. So it sort of presents an interesting why question. And I think a lot of the whys you covered earlier, Mitchell, that crypto has this sort of jaded past and has been involved in a lot of nefarious activities out of the gate. Fast forward to today, we know from studies done by Chainalysis and other blockchain analytics companies that it represents anywhere from a fraction of 1% to maybe 3% at the high end of all activities in crypto can be traced to illicit activities. So there's still a lot of myth busting to do, but in the meantime, as I'm sure our attendees know, that doesn't help them. They're staring at the possibility that there's maybe 3 or 4 banks realistically that will even entertain a conversation with them, let alone come on in, we're going to bank you. And that process is measured in several months in terms of the application, right? And I should say applications, it's usually plural, right? Sort of, a couple of stacks of different applications, everything from, what your business model is and senior management and flow of funds diagram and your AML policies to be sure, and other attributes. And these banks are picky because they can be. They know that they have to answer to their regulators, and they know that it's going to provide them with extra work in terms of being able to intake these companies in the crypto space, oversee them, have regular interactions, document and paper their file, and then of course have to answer to their regulators every year as banks are reviewed on an annual basis at minimum, coming in and doing these reviews. They're going to be held to a higher standard, and these banks know that. So, and they also know that they control the supply-demand curve in terms of bank accounts. So they're super picky, and understandably so. They bear a lot of risk, and they have a lot of responsibility that goes with that. And so that whittles it down to just a handful of banks. And really, it means just having a comprehensive strategy and approach as the business owner going to these banks and finding them. They're not that hard to find, right? A couple of Google searches or interactions with folks on this panel will get you some names and information. But from there, the real work begins, and that means coming with your best and boldest in terms of filling out the application as thoroughly as possible, having top shelf AML compliance policies, getting your management team on board, having any and all assets in the compliance space that you have that you're able to display and share that knowledge with these banks. Really put yourself in that elite class for consideration. You fill out 1 or 2 pages of an application, send it in and say, well, I know there's going to be a back and forth, but we'll wait for them to respond. Those are the applications that don't get looked at. You want to come at it from hitting all the blanks, as many as you can. Obviously, if you don't have the information or if it's not there, certainly you want to have full candor and full disclosure on that, but come at it as best you can. Your best foot forward, and use that as the conversation piece. And really that means reaching out to these banks super early in the process. If you have not yet gone to crypto way, or you're thinking about a crypto business, have the conversation, break the ice, so to speak, with the bank super early on, and let them know you're going down that path. Yeah, they're going to give you the application. Then maybe they can give you a little bit of a dog and pony show about how their bank works and their fees and things like that. Wonderful. Take in all that information. But more importantly, you've broken the ice. You've had that initial conversation. You're in their radar screen. You get to tell them how serious you are and the folks you're working with, and how you're intending to be back with your application in due time. And so when that application does come in, you're a familiar face, right? Now they've recognized that conversation, and you're building a little bit of a bond there. So it's a little bit of a choreographed process, understandably so, but something, again, you want to have those conversations early on. And again, going back to my sort of analogy there, you want to be able to break the ice.
Right.
And as part of the licensing application process, you already have to have your bank account established. So we usually very early on try to do that piece first. But like Joe said, most of the due diligence that you need for the bank is what you're going to use for your license application anyway. So we're then simultaneously working with them, with the client, to establish all of that. So they've got it ready for the bank to pass due diligence, and then it's then used for their license applications. And with any bank partnership, I mean, they're going to want to know that there's enough transactions, enough volume that the bank is going to make money on it. So that can also be a challenge, not just that you're crypto, but that you're a startup in general. And, you know, for the first few months, for the first few years, even, it may not be appealing to the bank from a money-making perspective.
Yeah, that makes total sense. So I'll kind of segue a little bit into some of our final questions, or topics rather. So obviously, you know, blockchain itself, there's many uses of it outside of virtual currency. For example, you know, with smart contracts, you know, Ethereum being sort of a smart contract platform, which can automate execution of agreements and just, you know, really removing the whole need for a trusted third party. That, along with many other things, I'm sure we could talk all day about. So obviously, as regulations sort of, you know, advance and in some ways kind of catches up, I think a lot of these sort of use cases will become more and more important, and I think kind of take over some industries. I'll kind of take a step back and say, where do you guys see the overall regulation headed specifically for the US? Increasing, decreasing, evolving? What do you think?
I think increasing, definitely from a consumer protection perspective and disclosure. I think the combination of, you know, the increase in consumer complaints, if there are any, or consumer protection agencies getting involved at the state level to protect consumers, is going to increase the need and the amount of disclosures that are required.
Yeah, I would echo those sentiments. We talked about consumer protection earlier, and as Jennifer mentioned, it bears repeating that that's an important and hot topic. I think cybersecurity has been on the forefront as well of people's minds in terms of areas of risk management. I think if we're talking about DeFi and smart contracts, I think that is an area of crypto that's going to get a lot of scrutiny, and it's probably already in progress. We're just not quite hearing about it at a public level right now. There's going to be a lot of policy making decisions and regulatory actions I would warrant in that area, particularly for some of these more elaborate business models. And I think, you know, taking a step back and looking at this from a policy angle, we notice there's a huge difference at a high level between companies that do something with your crypto as opposed to companies that do a one-to-one, wallet-to-wallet, if you will, exchange of crypto and don't hold on to those funds or don't make a promise to make them available later time, later destination, later date. And that's something I know that the Bitcoin ATMs are sort of modeled after that, you know, direct wallet-to-wallet, and then they replenish the funds. So they're not holding on to your funds only for the time it takes to do the transaction. And I think we're probably going to see a lot of future policy making recognizing that sort of difference between the two, and then within those various buckets, different regulatory paths. And I think that's going to be a huge dividing line. And for those that are maybe a little bit more familiar on this call with crypto, you can look at some of the guidance from the IDFPR in Illinois, going back to 2015, I think it was. The initial guidance from Texas with Memorandum 1037. They started to really draw those lines. Maybe they were dotted, but now they're becoming a little bit more solid in terms of companies in the crypto space that hold on to your funds. Because then it begs the question, what are you doing if you're holding on to my funds? Are you just putting them in a lockbox and I can get them anytime? Or are you doing something behind the scenes with those? That's a different conversation, as opposed to a company that, okay, I go to a Bitcoin ATM machine, I put in cash, they send me the crypto, one-to-one, you know, I'm in and out less than 60 seconds. There's no holding my funds. It was only the time it took to do the transaction. And we're probably going to see a lot more business models go towards that direction of not holding on to funds, but doing just that one-to-one, wall-to-wallet situation.
Excellent. Yeah. Well, we're getting close on time. I always kind of like to leave a little bit of room for, I guess, any sort of final thoughts or you know, final thoughts. Yeah. And I'll go start with you, Jennifer.
Sure. I think, you know, gathering information, you know, listening to this kind of conversation, whether it's on the call today or as a replay, you know, is a great way to familiarize yourself with kind of the licensing process and different things like AML policies and compliance that you have to have in place. But it's really kind of that continuing education piece that you always have to be looking to see what's next and watching, you know, all media news sources and things like that to see what kind of the latest and greatest and what regulators are looking at, what your competitors are doing to kind of stay up on what the hot topics are and how to kind of be able to plan ahead for what's coming. I mean, if there's a service that you're offering and you see that your competitors or maybe the regulators have this at the top of their to-do list for the following year, you want to kind of think about, okay, well, is there anything I should be doing differently to anticipate this? Am I doing what my competitors do? Not that they're doing it right, but you know, it can kind of identify some red flags, and perhaps you're doing things, you know, better than they are, going above and beyond, and have more of a story to tell, you know, if there is a regulatory issue down the road.
Yeah, I would agree with that. I would sort of add, you know, do your research, do your homework before you enter the crypto space. And I think that sounds very basic, but you know, what I mean is really taking a step back, you know, measuring it in weeks and months, you know, doing your due diligence, doing your research, what you see out there in the marketplace. Not just researching your competitors, because that can get a little tricky because you don't know who's compliant and who's not, but doing your research more from an informational perspective, asking good questions of compliance professionals and legal professionals like Jennifer, and you know, coming prepared. I can't tell you how pleasing it is when we have a prospective client or a client call up and they're asking these in the weeds compliance questions that I would expect a fellow compliance professional to sort of bounce off of me as an industry colleague. And sometimes we're just blown away by the engagement and just the amazing depth of exploration that client has already gone through, and they're sitting there in the front row, virtually, of course, on the edge of their seat, you know, ready to ask the next question, and that says something about their character and about where they are, and it's going to really translate into some significant progress. And really show, and it'll show when they sit across from a regulatory examiner, or when they go to apply for a state license, or when they go to apply for a bank account. Really setting yourself up early, doing that exploration, being well informed. It's great to ask compliance professionals questions, but it's also good to come in with a little bit of knowledge of your own and some expectations. And you know, sometimes there are some things you'll learn that maybe you didn't know about, but it's good to have that done in a controlled environment, speaking to professionals, before putting yourself out there in the wild in the industry. Now you're exposed for not just the marketplace to see, but for regulators, law enforcement, and unfortunately the bad guys as well. So really putting that in play and really getting your assets in place in terms of policies and procedures. We talked about this at the outset. Any inquiries, any updates to your state licensing disclosures with the regulators, making sure you have the proper tools. We talked about blockchain analytics, but also making sure those tools can align with the realities of dealing in crypto. If you already have an existing product and service suite, do the assets you have now in terms of the tools and the knowledge base in-house of your personnel, is that going to work with this crypto product and service? And it's okay if initially the answer is no, but take that step back, bring in some of the resources you need, and coach up both your team and maybe even some of your vendors that may be in a position to help you out or get you set up to deal with the realities of crypto.
Excellent. Yeah, a lot of great discussion today, a lot of information. And I'm glad we didn't get too far in the weeds with some of this stuff, just because it makes your head spin a little. But yeah, so I think, let's see here. I believe there was a question posed to the audience. I'm not sure. I can't see any of the answers, but I'm not really sure. I think it was like kind of more of a survey question, but yeah, it looks like we have one more question I'd like to actually get to. We have about 3 minutes here. It says, if wall-to-wall, let me see here. Oh, it looks like now everyone can vote here, or not vote, but answer the question as pertains to them. But I will say, if wall-to-wall transactions are accomplished in seconds, how is it hackers have advanced crypto bridges, and what preventatives can be utilized to minimize this exposure? That's a very interesting question. I'm not sure how I would answer that. Any thoughts on your guys' end?
Yeah, I think the exposure, the biggest exposure for hacking is to have custody of funds, to hold on to that wallet, or hold on to the customer's funds. We're seeing an inordinate number of attacks on, and it's probably happening every day, maybe even every hour, of exchanges because they have funds in a dedicated wallet. So it's not so much the transaction, although you are exposed once you connect to the network, the potential for hacking. But what we're seeing is a lot more well choreographed attacks by illicit actors, sometimes with the backing of nation states, of exchanges or other platforms that hold on to funds, and trying to get in that way. And it's usually accomplished through some means of social engineering. It's a multifaceted approach that the bad guys would use. So that's where we're seeing a lot of the exposure in terms of potential hacking. I don't know if Jennifer had some thoughts as well.
Got it.
Awesome.
Excellent. All right. Well, I kind of like to just say too, thank you so much, CrossTech, for putting this together. And I hope to see everyone at CrossTech World. That's going to be, I suspect, a great event this year. And both Jennifer and Joe, it's been an absolute pleasure. And I hope we can do more of this and continue to educate each other and watch this market as it unfolds. So I think with that, I'll hand it back over to Anna.
Thank you, Michael. Great. It was such an interesting session. Thank you, Joe Ciccolo and Jennifer Crowder, for joining our conversation today. And thank you, Mitchell. It's been great. It was a great moderation. I think we had very good questions and very practical questions, you know, things that we might question ourselves with in the day-to-day life of this new and interesting world of crypto. So one more time, on behalf of everyone on the CrossTech team, we thank you. It's great to have this partnership with you, and where we collaborate with our community and create content of value, providing information to our audience. So thank you so much. Before we all leave, I want to invite everyone. We had a very good invitation from Mitchell to get together on our flagship event, our conference, World 2022. We're gonna be on from the 15th to the 17th in Miami. So we all expect to see everyone there. And I want to invite you to our next VRT, our next virtual roundtable. Will be hosted on August 23. And we're going to have the panel called Compliance Officer Roundtable, preparing and implementing cybersecurity, disaster recovery, and SOC testing. Hope to see everyone. I want to thank everyone that joined, everyone that asked questions, and to invite everyone to see the recording of this virtual roundtable. And actually, I think this is one of the most interesting. I think we're all interested in crypto. So looking forward to all of the publications and the discussions we can hold on our sites. Thank you, everyone, and see you in the next virtual roundtable.